Okay, now let's talk about the markup stage. Now the markup stage is the easiest stage to identify of all of the stages. Now the challenge with the markup stage is that you want to catch the markup stage in its early breakout, or you want to catch it in the middle from a base. We always want to trade from an accumulation period or a base. And the reason we do that is that it just turns out that when you catch a stock as it comes out of a base or an accumulation period, it has a tendency to move far enough to make the trade more likely to be profitable. So your markup phase is going to be characterized by rising price, rising on balance volume, lots of good news, new product, new CEO, new profits, new invention, whatever. If you're in the markup phase, there's going to be news, because news is what gets the public to buy stocks. Now, a stock in a markup period is typically going to make a new price high several times a month, usually weekly. Markup periods tend to have waves. There will be 3 to 5 pushes up on a markup period that has followed a base for 6 months to a year. This has been my experience. It's been this way for 100 years or more in the stock market. It just happens to be the way it is. Now, if you're in a stock and you're in the markup phase and the price is going up and you're following the system that you're learning here today, you're going to be placing your sell orders behind the rising price as it goes up. We do not wait and count waves to decide when we're going to sell a stock. If we're in a stock and the price is rising, we're moving our sell order up behind that price in a systematic and mechanical way, because the market itself is going to determine when we sell that stock. And we will sell that stock regardless of what wave it's in or how long it's been in the markup period, when the price moves against our position. Let's take a look at another chart that has an accumulation, a base, and a markup. Okay, this is a chart that I did trade, and I'm going to tell you right now, I traded it wrong. Now that you know that, I'm still profitable in this trade as of today. So one of the interesting things about being in a raging bull market is that a rising tide has a tendency to lift all boats. So if you're in a bull market, there's a lot of public excitement and a lot of buying pressure. So you don't have to be a genius to make money trading stocks in a bull market. Where the genius comes in is knowing which stocks are the best stocks to buy in any given bull market to give you the highest chance of being able to make phenomenal returns. Let's go back to the chart. Here we have a markup period. This appears actually to be distribution to me. I would not use this period, this particular chart, as an example of accumulation. And what's interesting about that is that subsequently, this chart jumped from a distribution period back into an accumulation period, and it did it on high volume. One of the keys we look for on a chart is a volume spike. We're going to cover that in more detail, but when you see a volume spike, that is an indication that a stock is getting ready to change phases. This particular stock went through a markup period, went into distribution, went back into accumulation, created a base, and went into a markup period. And each one of these phases in price movement was marked by spikes on the price. Here's your distribution beginning. Here's your accumulation beginning. There's your breakout into forming the base. And here's the beginning of the markup. Look at all of that volume coming in there. That volume is public excitement. When you see volume like that, that tells you that lots of people are saying, I want to own this stock. You want to buy the stock as soon as it wakes up. When this stock wakes up and starts moving up, the higher it goes and the more volume that comes into it, the more excitement is being created and the more people are coming in and bidding that price up. That's why these kinds of patterns that I'm showing you result in these kinds of phenomenal price moves. If it's gonna move, they have a tendency to explode because the excitement that's created by the volume drives it higher. Remember, the stock market, even though it's inside the computer now, is still an auction, and auctions drive prices up. Okay, this I believe is distribution. I don't know what happened with this stock that made it flip from distribution to accumulation, and I don't care. I don't know what this company does. I don't even know if they make any money. None of that's relevant. What we're doing here is we're making money based off of the phases that businesses go through with their stocks. And if you can identify the phase, then you can trade the next phase, and that's how you're going to be profitable. So here's the volume spike. Now we go into accumulation. Look at what happened with the on-balance volume line. It's gradually falling through here. Then you get the spike in price, boom, followed by the spike in volume, and then the on-balance volume line moves sideways, and then up, and then sideways, and then way up. If on-balance volume is moving sideways, that's neither good nor bad. It's better if it's moving up. If it's moving down, that's probably a characteristic of distribution. We also have something else on this chart which makes this such an exciting chart to catch before the markup stage. We have a smile in the volume, and we have a smile in the price. And when a stock smiles at you with both volume and price, it's saying, please come buy me. Now, we have another huge spike in volume. You would have been justified in purchasing this stock right here. In fact, that's what causes the spike in volume, people buying the stock. But you would also be justified in buying it right here. You're more justified here than you are here. Why? Because first we want an accumulation phase. Then we want a basing period. When you get an accumulation phase followed by a high volume breakout, followed by a basing period, what you're seeing happen is a buildup of momentum. Now, the only other thing you need to see is for the public to jump on the stock like crazy. And that's why you put your orders to buy as price moves up. There's no reason to sit in a stock if it's not going to go up. We're not dividend investors. We're auction buyers, and we're going to buy that markup phase when it begins. Well, as you can tell, this is a screenshot out of my actual trading account, and I bought this stock late. I'm not telling you to buy stocks in the middle of the markup phase. This is a mistake. But because there's so much energy and excitement created by these volume spikes and by this long accumulation period, on this particular chart, it didn't matter. I bought in at 230. When I took this picture, the price was 458. So there's a 100% move in about 3 or 4 weeks. That's what the accumulation phase and the heavy volume spikes creates. It creates the energy to make those kind of moves.